how you're going to get to where you're trying to go as a company. So doing that every year and then having it roll out every month and tweak it as you go along, because things do change as you're trying to execute your plan during the year, like COVID or supply chain or the recession. There's always something that's going to trip you up. But if you don't have a plan, you're shooting in the dark. And if you do well, it's just by luck in effect, because you really didn't have a plan that you were executing. So I think it's super important.
Growing a business requires a holistic approach that extends beyond sales and marketing. This approach needs alignment among people, processes, and technologies. So if you're a business owner, operations, or finance leader looking to learn growth strategies from your peers and competitors, you're tuned into the right podcast. Welcome to the WBS Podcast, where scalable growth using business systems is our number one priority. Now, here is your host, Sam Gupta.
Hey everyone, welcome back to another episode of the WBS Podcast. I'm Sam Gupta, your host and principal consultant at digital transformation consulting firm Elevate IQ. Finance always takes the backseat in organizations over sales and operational priorities. But without setting clear financial goals and plans to execute them, it's like shooting in the dark. Sure, you may have gotten lucky to grow at the desired pace, but how confident would you be to sustain that growth? Not much, right? This is where the connected systems and financial KPIs can provide the framework for growth with confidence. In today's episode, our guest, Jim Downs, shares his insights into the importance of tracking meaningful financial KPIs to improve profitability and growth for CPG companies. He also discusses the unique challenges associated with matrix inventory and how the planning for such inventory is slightly more involved than most other businesses. Finally, he describes the importance of having a plan and why connected systems are important for continuous tracking and improvement. Let me introduce Jim to you. Jim Downs is a fractional chief financial officer and forward-looking strategist. He is the founder of Blueprint CFO, a future-focused CFO and accounting services firm based in Orange County, California. By holding clients accountable to their growth goals, Jim and his team provide a competitive advantage over typical CFOs by leveraging data to create a profitability roadmap for success. With that, let's get to the conversation. Hey, Jim. Welcome to the show.
Good morning, Sam. It's fun to be here today.
Good morning. It's going to be fun for myself and for our listeners because of your background in doing the profitability and doing the financial performance. Just to kick things off, do you want to start with your personal story and your current focus, Jim?
Yes, Sam. So I guess you could call me the numbers guy. I have been working in the area of financial accounting and profitability for 30 years or so. And so, my goal in my current career is helping companies identify where there's opportunities to grow their business, where there's things that are working, where there's things that are not working in their business using their data.
Okay, amazing. So obviously it's going to be really interesting to dig into the specific data points that you look at, specific KPIs that you look at, and we are going to do all of that. But before we do that, we have one of these standard questions that we ask every single guest that come on the show, and that is going to be, Jim, your perspective on business growth.
It's not easy to grow a business. You have to have a unique product or service to get into the position of having an opportunity to have an emerging growth business. But you want to make sure that you're paying attention to your numbers as you go down the road with that growth, because you may be doing things that aren't profitable, that are leaving money on the table, you're just not running your business as well as you could because you don't have good access to data. And access to data means, getting into your accounting system and bringing data out of there that is actionable. Most accounting systems give you data that isn't actionable. It's just what I call a bunch of numbers. So our goal, my goal working with clients is to make sure that we give them the data in an easily digestible form that is important for them to be watching. and trends that are going on in the data that maybe they're not seeing because they're just, running as fast as they can and trying to, be in what I call the go-go years.
Yeah, I completely agree. In fact, we see this trend in our customer base as well. And I agree with your assessment that, data needs to be meaningful, data needs to be actionable. But some businesses, they understand the importance of the actionable data. Some businesses feel that, they have actionable data when they might not. So do you want to provide some examples of different either KPIs or the metrics that when you talk to these businesses, they might feel that they have the right data, but when you look at that, you will know that they just are not looking at the right data. So provide some examples of the incorrect KPIs from your perspective and the ones that really matter from the action-enabled perspective.
So the example I'd like to share with you is we have a company, they're a consumer products company, and their product has been very well received during the time of COVID.
Okay.
And so during 2020, they actually doubled their sales from 2019, when some companies were struggling because of COVID.
Yeah.
So coming into 2021, we set a sales goal to increase the growth, continue growing, and to do another 50% growth in 2021. As we got into the middle of the year, we identified that we weren't hitting our sales goal. And the entrepreneur happened to mention to me that, one of the problems was they did not have their number one selling SKU in inventory because of the supply chain issues of goods coming over from Asia.
Yeah.
And also because he did not order the right products when he set up the order for the 2021 model year.
Yeah.
And so, we took what he had been doing and we helped create a model for optimizing his inventory and identifying stockouts. Stockouts are when you have a product and you can't sell it because you don't have it in inventory. And we identified how much money he had lost because he did not have the right products in the inventory. So that's all water over the dam. That's where most accountants stop is, how much money did we lose? But we really want to focus on how can we do better in the future and what data do we need in order to not have that happen again. And so we've created what I call an inventory optimization model, which will consider, what we should be ordering based on product trends that are emerging. They have actually one part of their segment is a very hot area, so you can't really model off of the historical data because it's a fast growing part of their industry, and they need to order more of those kind of products because people are the appetite for that product is increasing. So it's a complicated situation, but using the data and building a model is a way forward to have a better view of what should be done on the inventory side, which we think will actually allow them to get to the 50% growth that they're shooting for, which is about 10 million in sales.
Okay, amazing. So let me recap to make sure that I myself and the listeners are able to follow along in the story. So since you mentioned that,
Sure.
This was roughly $10 million for this specific SKU, which was roughly 50% of the sales. So I would assume that this is probably going to be $20 million business. And that actually sets a lot of perspective here in terms of the size of the business. And this specific SKU, which was doing the heavy lifting overall from the revenue perspective. That's going to be my assumption. So now, I don't know if you're going to have anything else to add there overall from the business sizing perspective, but it's going to be really important for our listeners to be able to follow along. But once we have the right business in context, then I would like to dig a little deeper into the model that you have built. What were different variables of this specific product? If you can talk a little bit more about the product, what were different variables that were driving the demand for this product and also the supply, and what was the model like? I don't know if you are going to be comfortable sharing all of that information, but I would definitely want to know a little bit more about that.
Of course. So I think I was misleading there a little bit. So it's not just one SKU. There's let's say that, for example, there's about 300 SKUs.
Okay.
And about 50 when we looked at what should be the top selling SKUs based on historical trends prior to 2021.
Yeah.
About 80% of those SKUs we were out of around 50% of the time during the year. So it's more complicated than just one SKU. It's a whole bunch of things going on in the inventory.
Okay.
This company actually is, yes. So the other thing is there's the product that comes in multiple colors and multiple sizes.
Okay.
And so unfortunately, because they were ordering based on gut instinct and actually modeling off of their 2017 sales, which were very outdated, they did not buy the right colors and they did not buy the right sizes.
Okay.
And so, you have to look beyond the fact that they didn't have the right models in stock. They didn't also have the right colors and the right sizes. So it kind of goes beyond what a person can actually do in their head. It has to be done in a scientific way. And that's where I think we've really helped them a lot.
Okay, amazing. So obviously it'll be helpful to know a little bit about their systems, what kind of systems they were using. And my assumption here is going to be, I don't know if they had a lot of data available. You did mention that, this was a fast growing product, so they did not really have the historical data available. But you also mentioned that they were looking at the 2017 data. I don't know what was the rationale for looking into the 2017 data. One of that could be because their procurement, which was actually buying the product, may not have access to the data. From the sales perspective, I don't know if procurement was operating on a completely different system. If they had access to data, do you want to talk a little bit about the system architecture? Also, how teams were structured, how many people were there, how their departments were structured, and how they were accessing data?
Yes. So I'll just say in general, as companies grow, their systems need to be more robust in order to be doing the proper job. And you already know that, Sam.
Yeah.
But so, going back 3 or 4 years ago, they were using QuickBooks to do their accounting and also manage their inventory. Then they switched to a product called Stitch Labs. You may be familiar with that.
Okay.
And that was fine. But then Stitch Labs got acquired and went out of business. So they switched to another system called Bright Pearl.
Okay.
And again, it's an ERP system that manages inventory, helps you create what they call a demand planner.
Yeah.
So you can identify what products you should be ordering.
Yeah.
And what, helping you manage your inventory, basically. But the problem with that is because there were 3 different systems over, let's say, a 3 or 4 year period.
Yeah.
Now you have data in 3 different systems that aren't coming all together into a model that is needed in order to make a proper decision.
Yeah.
And so, neither over time, maybe the Bright Pearl system will be okay because there'll be enough historical data in there to make a proper decision as to what products to order.
Yeah.
But then you still have the other facet, which is the emerging products in the product mix that need to be ordered. Because if you just go off the historical data, which is what the Bright Pearl system does, then you're still not going to order the right product. So it's not that simple. And, the owner, in effect, and this is not unusual, was doing things from the gut. And the company had been successful going way, the company's a 15-year-old company. It's been in business for a long time. Yeah. They've always made money. So that it's not like they were losing money, but it's just they were leaving money on the table because they didn't have a proper decision support system for when to order inventory and how much to order and what SKUs to order. So, I think having them help get their arms around their data better has been a huge advantage for them, and we'll see how that all plays out in 2022.
Okay, that's very interesting. So let's recap a little bit more overall in terms of this journey. So first, you mentioned that they were on QuickBooks, then Stitch Labs, and then Bright Pearl. My understanding of Bright Pearl system is that is sort of the omni-channel retail system. It's not meant to be an ERP system, even if they might claim that they can probably do the inventory. I don't know what is going to be the back office from the finance perspective or the accounting perspective. Most likely, it's probably going to be talking to QuickBooks. And my understanding is that they just got acquired by Sage Intacct, if my recollection is right. So now it's probably going to be part of the Sage Intacct portfolio. And the reason why they have acquired is because Sage Intacct, as you know, was very weak overall in terms of the retail distribution inventory functionality. Now they are acquiring Bright Pearl to complement that functionality. So they are going to be equally strong there as well. So from your perspective, when you say they had these 3 different systems that they grew over the period of time, when you are going to be implementing these systems, you are going to be making a lot of changes in the inventory, because when you install a new system, you are going to be changing maybe the SKU model that you had before, wasn't supportive of what you have today. And if you are going to make those changes, it's going to be really hard to correlate between these historical systems. So did you face the same thing when they had three different systems? And I don't know if all of these three systems were live at the same time, or were they utilizing the old systems only to look at the historical data to make those decisions? So when you look at these three different systems, what were the core challenges that you faced?
Well, I think, over time, they were getting more sophisticated in how they are doing the inventory planning, let's just say that.
Okay.
So the three systems do not talk to each other. It's challenging to bring historical data into a new system.
Yeah.
And I didn't mention the Sage Intacct acquisition, but obviously that's another curveball.
Yeah, I know.
that we now have to deal with. We don't know how that's all going to play out.
Yep.
So that's where I believe that the system is great and all of that, but in my experience, you still need somebody to be involved to make sure that the system is emulating the reality as much as possible, because you're going to if you just count on the system to give you the answer, and without rethinking it, even on BrightPro going into their demand planner module, and I don't know how much familiarity you have with it, it doesn't really give you any kind of backup or detail of how they calculate what they say to order.
Yeah.
So you really don't know what's behind the curtain in terms of how that software works. So I think, again, it goes back to, I believe, a company like ours that works with clients that are doing this, it's really important that you have a second set of eyes on, what your system is telling you to do, because you're going to be back in the soup where you're not getting the right products and you're not hitting your sales goals because you relied on historical data and didn't factor in emerging trends or, popularity of colors and all of that stuff that is more real time and can't be done on a historical model basis.
Yeah, and as I always say, that the system is going to be as smart as the operator who is really operating it. So it doesn't matter how smart your system is, if you don't know how to operate it, it's going to be really, really hard to get the outcome that you are trying to get from the system. The system could be as simple as possible, or it could be as complex as possible. So now let's dig a little bit deeper into the SKU level planning. And when we look at the matrix inventory is what you are talking about here. When you have the multiple colors, multiple sizes, did you have any sort of challenges because the way your SKUs were structured? And maybe you want to talk a little bit about how you had structured your SKUs and how that drove your planning, and then maybe touch on a different variables that were in effect for these different designs that were driving the inventory stock out.
This company actually is a bicycle company. It sells bicycles.
Okay.
So not to diminish anything here, but the management team in the past has been doing the best they could in terms of identifying what to order. And you have to order a year ahead of time because, particularly with what's happened at the supply chain, in the old days, it would take 30 days to get a product from Asia. Now it's taking them 100 days.
Yeah.
And beyond that, you have to order ahead of time because they have to get the components together.
Yeah.
And you have the components, so you're pretty much locked in for a fairly long time in terms of what products you're going to order.
Yeah.
Going back in time, historically, they would have for their top models a 1-speed, a 7-speed, and a 21-speed.
Okay.
And that's what always they had. And when we got into this year, we started looking at getting to that detail. And we found that the 7-speed was by far the most popular model, the most popular SKU, but they were still ordering 1-speeds and 21-speeds.
Okay.
I think you mentioned this in the beginning of the program. You can have a lot of, as a salesperson, when you're running a company, you want to have as much inventory in as many different colors and options as possible because you want to hit every single customer that comes to your website and is thinking about buying something. But on the other hand, from a financial standpoint, it may not make sense to have all those products in stock because you just don't sell enough of them. So again, if you're not doing a scientific analysis of what's selling and what's not selling and using that to tweak your order buying in the future, you could be buying products that you're going to have to discount or are just going to sit in the warehouse for months before somebody actually buys it, and it's just just not efficient.
Okay, so in this specific case, you mentioned, I mean, there are some very interesting comments there. Since this is a bicycle company, and you mentioned that you have to order 1 year in advance. So just to make sure I understand this and my listeners understand this, are these components that you are buying in advance, or are customers waiting for a year for these products? I mean, they have to wait for a year to get the bicycle. I don't think that is true, right? I mean, they are probably buying some of the critical components
No.
that are probably taking a year to get that delivered, right? So number one, that I don't know if you have anything else to add there. And the second thing I would like you to touch on is what were the core reasons why they were ordering those 1 speed and 20 speed bicycles when they knew that they actually were selling 7 speed. But I'm pretty sure they didn't know that. But do you want to describe the process? What were the primary disconnect? Was it really from the system perspective, or was there anybody who was really looking at data, or the data was completely disconnected because they were not able to correlate among the system? So, what were the underlying reasons?
I think all of the above.
Okay.
The data wasn't well organized. The data wasn't being analyzed. The company was doing fine. It was making a profit. And
Yeah.
I've seen it over and over again. When the company is making a profit, there's no pain to really dig in and identify what's really going on and what could be done better.
Yeah.
And then that's exactly what happened in this case. They were doing fine, and they still are doing fine. It's not like they're struggling financially, but they could just be doing better because now we're digging deeper into the guts of the company in terms of how it really works and identifying things that are not optimal
Yeah.
and could be improved. Going back on the 1 speed and 7 speed, this company's been in business for 15 years. So in the past, the 1 speed sold, the 21 speed sold. Nobody was really looking at it from a statistical perspective to say how much money are we investing, what's the cash conversion cycle,
Yeah.
and how long does it take for each SKU to turn from when we buy it to cash, and that's an important factor that I just say in general, a company in the go-go years again, where they're growing very fast, is just it's just nobody's taking time out to stop and look at those kind of things. This is kind of with most consumer products, but if you're lining up your inventory buy for the next year, especially in the bicycle industry, you're going to buy certain products, and you need to have if you're ordering so many 7-speed bikes and so many 1-speed bikes, you need to order the components from the people that make the shifters. You need to order the brakes from the people that make the brakes, the seats from the people that make the seats, et cetera, et cetera. And so there's a long lead time there from the product planning stage to all those components coming together in the factory in Asia and coming together as a product.
Yeah.
So the customer, the goal of the company should be to have the product in the U.S. in a warehouse ready to ship when the customer comes online and wants to order.
Yeah.
But there's a whole year before that planning to have that product there that has to be executed well in order for the company to max out their potential.
Yeah, so some very interesting commentary there, and obviously, I would like to know the symptoms, for the company, especially when you were brought in the account. I'm pretty sure they were facing some issues. You mentioned that they were not really struggling financially, and typically, when they are not going to have any issues, nobody is going to pay attention to either balance sheet, or nobody's really going to care whether anything can be improved or not. So in your case, what were the core symptoms that they were noticing, and why they started looking into this? What were the core reasons there?
So this is kind of my big thing working with anybody, and that is having a plan for the year that's laid out by month.
Okay.
That is reviewed every month to identify, are we on plan or not on plan? And when we had a plan to grow significantly this year, as I mentioned, and when we got into May, June, when it was the hot selling season, we saw that we weren't hitting our numbers.
Okay.
And the company's still doing well financially, but we're not hitting our sales numbers. And when in a meeting that we had to discuss why we weren't hitting our sales numbers, the comment came out that well, by the way, we've been out of our top SKU for most of the year.
Yeah.
Like, well, wait a minute, how'd that happen?
Yeah. And
so I just believe that it's important to have a plan. Everybody has a plan as they're starting their business, but as you get rolling and you're in the 5th year or the 10th year, you tend to forget about that and just come into work hard every day.
Yeah.
And not have a plan in a detailed plan in terms of how you're going to get to where you're trying to go as a company. So doing that every year and then having it roll out every month and tweak it as you go along, because things do change as you're trying to execute your plan during the year, like COVID or supply chain or the recession. There's always something that's going to trip you up. But if you don't have a plan, you're shooting in the dark. And if you do well, it's just by luck in effect, because you didn't have a plan that you were executing. So I think it's super important.
It is indeed important. And typically from my experience, when we work with these businesses, the problem that you are trying to describe would come under either the operational problem or the supply chain problem, or maybe a sales problem, right? But obviously you are a finance guy, and finance guys are the last ones to be called when you have either the sales performance issue or the operational issue or the supply chain issue. So in your case, let's talk about the importance of bringing finance people early in the game so that they can really help. Or if finance people or the accounting people should really care about the supply chain or the operational problems, or are they really stepping out of their role, when they are looking at, let's say, the operational or supply chain problem?
Thank you for asking that question, Sam. So historically, accountants are historians.
Yep.
And that's a problem. They're only looking at the past and documenting how the company did in the month of December, for example. Here we are in January. How did we do in December? And they're not really thinking about, why did we do what we did?
Yeah.
Whether it be good or bad, and what does that mean for the future?
Yeah.
So my theory of business is there's three different major functions going on in every business, and you just touched on it: sales and marketing.
Yeah.
You're out trying to attract a customer and get them to buy your product or service, and that has to be efficient. And their finance can be part of that, because they can be managing, like, how much money are we spending on Google AdWords and things like that, and is it as effective as it used to be? Because there's a lot of times a lot of wasted money going on in sales and marketing. Then you have operations, and so that's where you take the order and you have to deliver a product or service that is high quality and get the customer to be happy with the experience of doing business with you. So that's very important to do a good job in operations. But the third major function is finance and accounting.
Yeah.
And a lot of times it's given short shrift because it's not really viewed as an important function, more of like a cost center.
Yeah.
And companies don't want to spend any money on finance and accounting, but really that's where all the money comes together. And it's super important to be managing your dollars, because everything else you do is kind of undefined or not quantitative, and where the money comes together, it's all quantitative. So that's where you can measure your goals efficiently and hold people accountable.
Yeah.
So having a strong accounting department, which a lot of companies don't see the need to do and don't want to spend any money on accounting, is really important, in my opinion.
Okay, very interesting perspective. So let's just go over some of the comments that you made over this interview. And when I look at the systems that you had mentioned, Labs, QuickBooks, and Brightpearl, obviously they are not the ERP system. And when you have the real ERP system, and I don't know if they have an ERP system right now, typically that's going to, especially for a manufacturing company such as this, bicycle, where you are going to have multiple components that are going in your bicycle. They are going to have, each of them are going to have their own lead time. Each of them are going to have their own vendors. They might have the vendor hierarchy. They might have vendor risk. They might have the costing and the cost accounting, and then finally pricing. Okay. So all of this is typically built as part of the ERP system. Now, if you are going to do this process manually, obviously, even if you have the ERP system, you will still have to do a lot of forecasting, but you don't have to do as much computation of your either the historical data, because that's all going to be very tightly integrated. From the data perspective, you are going to have far greater control overall in terms of your data, and you are going to have much deeper visibility overall in your data sets, and you are going to have far easier traceability from your sales to your finance. So in this particular case, I don't know if you had, let's say, the bill of materials as part of your, Brightpearl system, if the bills of materials are costed, if the procurement really uses the bill of materials, the operations use the bill of materials, as well as the other functions. I don't know, do you have any perspective on that?
I'd like to get your input on this, actually. So this company, as like most companies, the company does not manufacture their own products.
Yeah.
It's what I would call contract manufacturing. So they they design the bike and they put on, the different components that they want to see on the bike, like the seats and the tires and the wheels and et cetera, et cetera. And that spec is given over to the company in Asia to manufacture the bike. So in effect, they are the ones that are managing the supply chain for the parts. And if you understand what I'm saying, we don't really, since we're not doing the actual manufacturing, all we're doing is getting a price back. Like, it's going to cost $200 to make this bike, and then we have to figure out if we can mark it up sufficiently in order to make a profit. So it's kind of unique in that sense. I mean, there are companies that we work with that are doing manufacturing themselves, and obviously you have what you're talking about there, was a whole different ball game in terms of monitoring what the costs and the supply chain issues and et cetera, and doing your production planning. But in effect, we've outsourced all that to the company in Asia, and they do all that. So it's not a part of the BrightPearl system. I think BrightPearl can handle that, actually. I mean, I think I hear in between the lines here, you're not all that impressed with BrightPearl, but it does do a somewhat of a good job, to say that.
Yeah, and BrightPearl is an amazing system. There's no questions about that, but it is actually designed for a purpose. And since you asked my opinion on this, I'll offer that opinion as well. So manufacturing could be all over the place, right? In some cases, it could be very deep manufacturing, the way you described, that, contract manufacturers are the one who are really building, let's say, the seat or the wheels or the frame. It's not your distributor or the retailer who is actually retailing these bicycles are actually doing that, but they'll be doing a lot more operations when it comes to assembling that bicycle. They might have some more, I don't know if they are doing paint, if the paint is also done by let's say your contract manufacturer. I don't know what all operations are involved, but the whole process needs to be part of either your kitting process, which is again very ERP specific term, where you are going to be, because this all drives your cost accounting. So from the accounting perspective, you need to have the bill of material. Either you are using a distribution centric ERP system or you are using manufacturing centric ERP system. But unless you have the bill of material, and those bill of materials are actually going to be tied to your contract manufacturers, which are actually going to be your vendors, and they are going to be supplying the data. So your lead time is going to be part of your BOM. And when you are going to be doing your, let's say, if you are doing the MRP or distribution resource planning, in both cases, all of your lead times are going to be considered. And then the system is going to generate the plan for the procurement. Let's say if you are purchasing 1 year ahead, obviously BrightPearl will not be able to do that. It's not designed to do that. So one of the challenge, I don't know if it could be that, they did not really have an ERP system or ERP system integrated with their e-commerce system. In my mind, BrightPearl is going to be slightly more omni-channel retail system or the e-commerce system, not necessarily an ERP system. What do you think of that?
I mean, I totally agree with you. I mean, all I can say is that most companies that are fast growing, there's always need to improve the systems and processes they use, and it's kind of an iterative thing. So I believe that we've made a lot of strides with this particular client, but I mean, it doesn't mean it's where it should be, in the big picture. And but sometimes you can't come in and change the world in one day. You have to show the benefits of having better systems, step by step, and get them to walk down the path with you. And I'll just say that because, again, going back, they've been successful, but everything's been done from a gut instinct perspective, and there's been no science applied to, the data. And that I think it is pretty universal in most companies. They don't spend the time to dig into the data to, really understand how to do it better from the bill of materials perspective, from the supply chain, shipping point data, the cost of a container to bring products over from Asia. There's just a lot of moving parts that need to be identified, number one, and then analyzed, number two, and monitored as you go down the road to identify what it's all costing you and what the other alternatives are.
Yeah, I completely agree. I mean, it's always going to be an iterative process, and doing something like ERP implementation is obviously a much bigger change for the organization, and the executive team needs to be aligned with that. So as you make small changes, one of these days they are probably going to realize that, now it's time to go big bang with probably an ERP system. But the smaller changes are definitely worth considering in the short period of time till they get used to of the process. And once they realize the other challenges, then they are going to be working on the other changes that are going to be required to streamline the processes. Now, let's go back to the KPIs. So you mentioned some of the KPIs that you like to look at, especially the cash cycle of each of the SKU, because you need to have that understanding to be able to see which products are really performing and what are the bottlenecks for each of the products, so that anybody, whether you are operations guy or the finance guy, you can fix it. So what are some of the KPIs that you like to look at from the macro perspective as well as from micro perspective?
Well, I think KPIs follow along the lines of what I mentioned before, the sales and marketing and the operations.
Okay.
So I think there's KPIs and also finance and accounting. So there's KPIs with respect to sales and marketing. How many leads did we get? How many people came to our website, and how many people how many pages did they look at, and how many products did we sell?
Yeah.
There's always KPIs on the sales side. And then there's KPIs on the operations side, the same thing. So it gets to what you were talking about: stockouts, margins, delivery time. How fast do we get the product to the customer? That's another issue with what's going on with FedEx and UPS,
yeah,
as you probably know. And so there's a lot of KPIs on the operations side.
Yeah.
And then you go into the accounting, and there's KPIs there. How fast are we collecting our receivables? What we call day sales outstanding, the cash conversion cycle I mentioned. We want to, when we buy something, when we invest in something, whether it's a receivable or inventory, we want to track how fast we turn it back into cash. And if that's going longer and longer, that just means we're out of money for a long period of time, and it's costing us money. So the more that we can make that shorter, if we could buy something and pay for it the day we sell it to the customer, that's ideal, but that's not reality. But we need to track what is reality and focus on that. And then there's other, financial ratios like debt to equity, working capital.
Yeah.
And lastly, the biggest one of all companies is cash.
Yeah.
Where are we going with cash? And is our cash on our cash plan, or is it not on our cash plan? And if it's not on our cash plan, why not? Because at the end of the day, it's all about generating cash. That's how companies survive. If you're not generating cash, you could be out of business relatively quickly.
Okay, so what were your top 3 learnings from this specific engagement that you might be able to share with our listeners?
I think when you ask that, it's kind of funny because there's a lot. Every day there's something new.
Yeah.
So we've identified that there's many ways of selling your product.
Yeah.
If you think of a bicycle company as an example, you can sell through dealers, you can sell on your website, you can sell on Amazon, you can sell on Walmart or other portals. Which one is the best one? Where do we make the most money?
Yeah.
Because it's very confusing. I'll give an example of Amazon. There's many chargebacks, marketing fees. There's all kinds of things that you sell something for, make an example, $500, and you think you're going to get $500 from the company that sold the bike for you, but you end up getting $400 because they take all these deductions.
Yeah.
Well, that needs to be tracked. And, again, when a company's profitable every month, sometimes they just don't dig into those details. So there's all, and then get into the inventory and the stockouts and how much inventory do we even have? That was another confusing thing, because we have to pay for the inventory when it leaves the manufacturing facility in China. So we've had to invest in our cash in a product that's sitting on the water for 100 days now, which totally messes up the cash forecast.
Yeah.
So there's just, it's all about data. There's all this data, and it's not even, it's not a huge company, but it's big enough that there's a lot of data that everybody needs to be paying attention to. And when you're an emerging growth company, it's not something that you really sometimes think is all that important.
Okay, amazing, Jim. So that's it for today. Do you have any last minute closing thoughts or remarks for our listeners?
Sam, I would just say my mantra is know your numbers, know your company. Dig into those numbers, because there's a tale being told there. Whether you're successful or not, there's things going on in your data that you should be paying attention to. And it's super important to do that.
Yeah, and my personal takeaway from this conversation is going to be, even if you are doing financially well, it does not mean that you don't have any opportunities to provide further. So make sure you have really deep understanding of your data and key priorities. Even if you don't want to consider them right away, make sure you are at least aware of them. On that note, Jim, I really want to thank you for your time. This has been a fascinating episode.
Thank you, Sam. Thanks for having me. I enjoyed it very much.
Thank you. I cannot thank our guests enough for coming on the show, for sharing their knowledge and journey. I always pick up learnings from our guests, and hopefully you learned something new today. If you want to learn more about Jim, head over to blueprintcfo.com. It's BLUEPRINTCFO.com. Links and more information will also be available in the show notes. If anything in this podcast resonated with you and your business, you might want to check other related episodes, including the interview with Aaron Spool from Aventus Advisory Group, who describes what it means to have a cash flow mindset in the organization, and interview with Brian Goffenberg from Vital Hub, who discusses the difference between accounting for a public and private company. Also, don't forget to subscribe and spread the word among folks with similar backgrounds. If you have any questions or comments about the show, please review and rate us on your favorite podcasting platform or DM me on any social channels. I'll try my best to respond personally and make sure you get help. Thank you, and I hope to catch you on the next episode of the WBS.
Thank you for listening to another episode of the WBS Podcast. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. For more information on growth strategies for SMBs using ERP and digital transformation, check out our community at WBS.rocks. We'll see you next time.